Hello everyone, welcome back to a new session. In this session, we will see, let's suppose if I create a PO for 100 real and GR also done for the 100 real, and whenever I receive a invoice, it came for 110 real. So the differences between the PO and the invoice is a 10 real. The 10 real where it will capture exactly in the SAP system. Today we will see in the live scenario. So first of all, I will create a purchase order. So here I'm using the transaction code ME23N. Sorry. Yeah. I need to use the transaction code ME21N actually. So here I'm using the create option. Okay, and the standard PO, and this is my supplier. And in the header, this is my purchase organization, purchasing group, and company code. Okay, and then the item overview. So this is my material. So here I am inputting a quantity as 10, and each quantity I will change it to 100, and net price will be each will one will be 100 real. And then this is my material group and plant. Just hit enter. Okay, now it's calculated. Each unit is 100 real, and accordingly it's 10,000. And just click on save. So here we can see our PO has been created. The PO ending with 11. Now against to this PO, I will be creating a GR document. GR document will be the with the for the same value. So I'm using the transaction code MIGO, and here goods receipt against to purchase order, and then just copy the purchase order here, and then hit enter. And here I will be taking the quantity as 10 in the first GR. So item check, and in the where just give the storage location, and then click on post. You can see here this material document has been generated. Okay, let me display the document, and we will see the FI document first. So here we can see raw material account debit and GRR account clearing account credit with the 10 quantity we have posted this year. So it is a correct amount 1000. And now we will create a invoice document by using the transaction code MIRO. So here my company code is 1000. Sorry, company code is 2003. So I'm maintaining some reference, and then the PO and the item number. Just hit enter. Select the tax, and then while the invoice I received for 1200, I will explain you here. My PO has been created for 100 quantity. Each unit price is 100. So total PO quantity is 10,000 real. And Here I have done for only for the 10 quantity, each 100, and this will be 1000 real. And when it come to IR, for the same 20 quantity, I receive each unit price will be let's say 120, so it will be like 1200. So now the differences from PO and GR and IR is a 200 real. So now we will see where exactly this 200 real will be captured in the system. Okay, and okay, here we have one error message. Okay, okay, now just click on simulate. So here we can see the accounting entry, supplier account credit with the 1200, and the GRR account clearing account is debited with the 1000, and the differences are capturing in the priority account, the price difference account. So let me post this entry, and then we'll see the accounting entry again. So the document has been posted. Okay, let me display this document. Okay, anyhow, so it has been posted. Let's go back to the PO. Just refresh the screen, and what is happening? Yeah, item details and purchase order history. So you can see here for the 10 quantity we have created this GR, and against this GR we have generated AR with a different price. So there are totally 200 price difference is there, and it has been captured under the PRD account, which has been maintained in the OBYC configuration, the transaction key PRD. And here just click on the follow on for the accounting document. You can see here this is my PRD account. It had been captured in a PRD account. There are two scenarios out there. If the material let me show you the material. Okay. Counting one tab. If the material is using a standard price, mhm, yeah, here. If the material is using a price control as S, which means standard price, then it will go to this PRD account. What if we are using a moving average price, then it will go to different GL account. We will see in the next class. Okay. Uh, this question will be asking in the interview. So many times I have faced this question as well. So when the PRD account will be triggered, in which scenario the PRD account will be triggered, they will ask. So we have to tell like in the material master that if we are using a price control as a standard price, and then the PO has been created for 1000, GR is also done for the 1000, and when we receive the IR for 1200 or 1300, whatever the differences are there, that will be captured on PRD account. We have to say like this. So I hope it's clear to everyone. Thank you, everyone. Thank you so much.